Ladies and gentlemen, welcome back to the channel. Markets are moving higher today following really good CPI data. We talked about this over the last 2 days. I expected to get a really good CPI report, and that's what happened. Now, we also have some positive comments around trade, although not the big one that we are waiting for, which is a loosening of export controls specifically related to NVIDIA chips. That is your grand slammer catalyst. That is new all-time highs in a nutshell. Now, we're only about 1.2% away from new all-time highs. And it's funny, once you actually hit new all-time highs, that's when the chase begins. That's when Wall Street is going to start FOMOing into stocks again, because once you hit a new all-time high, you tend to hit many new all-time highs. And when rallies fail, recovery rallies, you tend to fail before you hit a new high, which is right about where we are today. So here in this video, I will give you an overview of all of your breaking news today, and the data coming out tomorrow and my expectations. Ladies and gentlemen, hit that like button and subscribe to the channel before we get started. And let's get started. Now, in the news today, China is giving a 6-month easing on rare earths, and that is giving Beijing continued leverage, according to the Wall Street Journal. U.S. negotiators agree to relax some export controls, including on jet engines. U.S. Treasury Secretary Bessent says today that trade talks with China will be a much longer process. U.S. Commerce Secretary Lutnick says there is no text on the deal, just an agreement after China's President Xi approves. So this is going to be a long process in dealing with China. I was optimistic or hopeful that we would actually get some kind of deal over these last couple of days etched out. It doesn't even look like we're there. It just looks like we have an understanding and certain frameworks that will be implemented, but there's going to be a lot more discussions here. U.S. Commerce Secretary Lutnick says China agreed because the U.S. won't go after bank records. Yeah, that's a little sus. Lutnick says China is giving magnets for Chinese students coming to the U.S. Treasury Secretary Bessent says an AI revolution may lead to a productivity breakthrough. Yes, robotaxis, self-driving cars, humanoid robots, okay? People becoming more efficient in their workplaces via, large language models, things like that. Of course, you're going to see a productivity breakthrough. Now, U.S. Commerce Secretary Lutnick says Europe will probably be at the very, very end in terms of actually getting a trade deal. And he says that Europe was more than thorny in trade talks. He says we're in good shape with a lot of countries, but good shape is not enough for the U.S. And we've heard this one before, but Lutnick says deal after deal will start coming next week. One of which looks close is India, another one that looks pretty close is South Korea. And Lutnick says we're now focusing on other deals. And Lutnick on China Talk says we used plane parts and ethane as a bargaining tool. I was optimistic and hopeful that we would actually see semiconductors thrown in there to loosen some of those export controls on NVIDIA, but it doesn't look like that happened. U.S. Commerce Secretary Lutnick says you can say that China tariff levels won't change from here. And he says they've agreed we are going to examine how China can do more business with the U.S. And he says that our leaders want this to be positive. Lutnick says the Chinese side always wants to remove export controls. Again, they want NVIDIA semiconductors. He does say that Trump and China's President Xi have to approve the final deal. And he says we are in a great place with China. So some definitely positive headlines today, but not the ones we really wanted to hear, which was some of those, again, semiconductor export controls being lifted. That was the big catalyst that would send markets to new all-time highs. U.S. Treasury Secretary Bessent says that capital investments within the U.S. will increase once the tax and spending bill is enacted. This is because the 100% essentially tax write-off for business-related things, right? If you're a farmer and you want to buy a tractor or whatever, just using an analogy here, if you're currently only able to write off 50% of that tractor, but let's say the tax bill does get passed and you'll be able to write off 100% of that tractor, you may wait to see, especially to buy that tractor, especially if you don't absolutely need it. Like if you just want it but don't need it, and you can only write off 50%, you might not buy it. But if you can write off 100% and you need it or want it and just don't need it, you may buy that tractor. Hopefully that makes some sense. But that goes, broadly speaking, for capital investments within this country. That makes a lot of sense. And Bessent says that he sees a 6.5 to 6.7% budget gap for fiscal 2025. Bank of America's CEO Moynihan says corporations are being careful outside of AI investments. So when it comes to AI, they're investing. I mean, there is an AI arms race within this country and globally. But other things, they're being a lot more selective. That is one reason on this channel and in my personal finances, I have been searching for those under the radar AI stocks, those stocks that are going to continue to see money spent on their software and on their products and services, because I don't think that's going away anytime soon. Bank of America CEO says there is a lot more uncertainty in the small business market than there is in the core consumer, which is again a pretty good comment around the consumer. Bessent says that China should not be allowed to export its way back to prosperity. Bessent has really called for China to become more of a consuming country. China, just relative to like one Chinese citizen compared to one US citizen, we consume like 3 times more than they do. Just throwing a number out here, like we consume a lot more than they do. They export a lot more than they consume. So if they started consuming more, then there would be a bigger market for US goods, and that would also help China's economy to grow. And that's something Bessent has been advocating for throughout this whole trade war process. Bessent says if China upholds its end of the initial Geneva trade agreement, a big, beautiful rebalancing of US and Chinese economies is possible. He says that China needs to be a reliable partner in trade negotiations. And he says we will see if they are. Now, Donald Trump wrote today on Truth Social that the Fed should lower 1 full point. So that's 4 rate cuts. Just take it down 1%, which, again, you kind of have to agree with him following today's CPI report. As I talked about last night, I expected the CPI report to come in on the light side, and that's exactly what happened today. Core month over month was expected to actually rise from 0.2% to 0.3%. It actually fell to 0.1%. So it came in way lower than expected. And again, this was the first CPI report that was expected to show some of the increased tariff rates, right? So a lot of people were expecting inflation was actually going to rise. It did not. That's why you got that big boost in pre-market for stocks. Core year over year came in at 2.8%, unchanged from last month. The estimate was 2.9%, so that was better than expected. Headline inflation month over month came in at 0.1%. Expectation was 0.2%. And year over year CPI came in at 2.4%. Expectation was 2.5%. That was a little bit higher than last month's 2.3% number. So overall today, very positive development on CPI. Trump says today that Chinese President Xi and I are to work closely together to open China to US trade. According to a U.S. official, the U.S. will keep the 10% baseline tariff and 20% fentanyl tariff on China, with total effective tariff rates that will be 55%. This didn't change at all, but it kind of hit the headlines in a weird way today. Nothing changed today, right? 55%, blah blah blah. Nothing changed. They didn't raise tariffs today. A CNBC reporter on X clarifies that this just adds to the 25% tariff that was already in place before this term. So if you add everything up, it's 55%. And US short-term interest rate futures jump after this CPI data, again, because people were not expecting a good inflation report today. And that's exactly what we got. So for June 18th, the next Fed meeting, there's a 96% chance the Fed is actually going to, am I reading this right? Cut rates. Am I reading this right? This doesn't sound right. Okay, well, it's right. There's a 96% chance the Fed's going to cut rates on June 18th. That is about 5 weeks from now. And then they're expected to hold through July until September, in which they're expected to cut rates again with 53.8% odds. So a cut in June, a cut in September, and then it looks like a cut potentially on June 10th, although the odds are kind of all over the place. 39.3% chance of a cut December 10th, 28% chance of only 2 cuts by then, and a 21.7% chance of 4 cuts by then. So you're technically pricing in 3 cuts if you look at the probabilities here between now and year end, but it's probably more like 2.5 cuts because the distribution is so wide for December 10th because of all the potential outcomes that could come about in the economy and with inflation over the next 6 months or so. Now, we do have some earnings today in after hours as well. Oracle is going to be a big one, especially for those AI names, more of that software, cloud, okay? It could definitely move the broader markets, that's for sure. Now, tomorrow, not too much for pre-market, but in after hours, you have Adobe and Restoration Hardware. Adobe, definitely important for that AI software component, although I don't think Adobe is going to move a lot of other names just because of the kind of software they're in. Now, tomorrow morning, we are going to get PPI month over month for May. You are expecting 0.2%. Last month was super negative. Same is true for core month over month. You're expecting 0.3%. Last month was negative 0.4%, so super negative. Initial jobless claims expected at 240,000. Last week was 247,000. That's actually a big data set we want to watch. Hopefully they come down. But if you continue to see a rise in initial jobless claims, Wall Street's going to start to worry about that eventually. So keep your eyes open for that tomorrow morning. And then on Friday, you get Michigan consumer sentiment preliminary numbers for June with 5-year and 1-year inflation expectations that are really going to be in focus. U.S. Treasury Secretary Bessent says if the debt limit is not sorted, it could be the biggest crisis since 2008 and 2009. And he says it is unthinkable that a debt ceiling breach could happen. If you look at the headline S&P, this is also pretty interesting to me. We're just kind of going up in a very methodical pace. Like, we're not exploding higher. There's definitely a low volatility kind of place and time that we are at right now. You're just going like very systematically, it seems like. And it does feel like markets are primed for a larger move higher. Now, here's where it gets interesting, because if this rally was going to fail, it's going to fail right now. It's going to fail very soon. And that's why you have some bears that are coming out that are bearish, okay? But once we break new all-time highs, which is like, what, 1% away or so from where we are right now? Roughly like 1.2%, 1.25% or so. Once you break those new all-time highs, that's when people are really going to start chasing this market again. That's because, again, as I've said before, once you hit a new all-time high, you tend to hit more new all-time highs with a much greater succession rate, okay? Typically, if you're going to fail, you're going to fail right before you hit a new all-time high. And so far, we have not failed. You're continuing to go up at a slow and steady pace. So watch for that big breakout, which could come by the end of this week. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.